This is the market video for the week of January 19th, 2015. My name is Michael Saul, also known as Tiny. I am actually recording this video on the 19th. It was Martin Luther King Day, which is a holiday in the U.S., at least a stock market holiday. Everything else seems to be open except the post office and all the federal stuff, I guess. But a couple of banks were open, and I don't know. I went out today and it was jammed, so everything was open. Anyway, I don't know why I'm telling you all this, but let's take a look at the market. And last week we saw the pullback come out of this small counter rally from the week before, and then Friday we had a small gap down and wound up putting in a rotation day. Wait, let me show you what it looks like on the 5-minute chart. You can see here we took out the previous day's lows, and then we came back up and rotated back up to the area. We didn't quite get there, but basically the highs of Thursday. So does this mean that the pullback is over? I need more evidence here. All right, right now we have a potential double bottom here, including making this one leg. All right, and if we can get up above these moving averages and this last peak, then yeah, I think we have a very good opportunity to get to new highs. But from here, if we were to break down here, we have to definitely give the 200-day moving average respect. But if we got through that 200-day moving average and then we continued to go down, not like this where we got through it and then came right back above it in a V, well, then the times could be changing here. Personally, I do not feel that this is the high. I do not feel that the high is in here. Could we be forming a potential head and shoulders pattern? Absolutely. But the trend right now is very strong to the upside here. And even though we haven't gotten off to a good start market-wise in 2015, that doesn't mean that we're going immediately into a bear market. I think it's ridiculous to throw the bull out with the bathwater, as they say. Well, they don't really say that, but as I would say. All right. So here's the Nasdaq, broke down out of the consolidation, came back up, kissed it goodbye, and it's still holding in here. 200-day moving average below. I skipped the Dow, but it looks kind of like the S&P, except putting in a little bit of a higher low compared to the December low here. The Russell 200-day moving average is holding for now, but it's the same situation. Can we get in the mid-cap, same deal? Can we get a bounce here, or are we going to break through that 200-day moving average? Let's look at some sectors. Semiconductors showing okay relative strength. Here's Clad Tanker, which had a nice looking pattern. No confirmation, and now it's consolidating at a batch of moving averages here. So we're waiting to see, is it going to do this or is it going to do that? Intel, one of the best looking stocks as far as patterns were concerned. I talked about it. Still looks okay. Yeah, Intel still looks okay here. I think it's a nice looking pattern. Of course, if it breaks down out of this, then it's a different story. But right now, it looks like it's setting up for higher prices. Of course, always wait for confirmation. NVIDIA trying to get off its butt. Banks. All right, so the banks. Now, we talked about this last week, how the banks were the red flag on the market, and they wound up continuing lower. So is the low in? I'm not so sure the low is in here, but I'm going to give the bulls the benefit of the doubt if they can get some upside going and if they can get back up above that 200-day moving average. But if not, yeah, I'm going to be looking for the banks to at least test the October lows here. If not, go lower. Well, you got these lows at 64 from, I don't know, October, November of 13, whatever it is, doesn't really matter, but there's the low right there. All right, you got these lows here, which is what, 61 and a change? Let's see what it is. 6107. So, those are definitely levels to watch if we were to continue down. If the financials don't get off their butt, it's going to be very hard for the broad market to get a good bounce. All right, Bank of America, and a lot of these that I'm going to go through had earnings last week. Wells Fargo, I believe they kicked it off. You can see broke through the 200-day now, kissing it again. Is it going to get through it, or is it going to turn from here? Look at a stock like Zion. I mean, this looks like you should be watching for bear flags to set up here. Northern Trust, Bank of New York. Look at this Bank of New York here. All right, consolidating right under the 200-day moving average. I love patterns like this. Why? Because I'm looking for a release one way or the other, and you use the other side as a stop. It's a very tight trade. Okay, J.P. Morgan. Yeah, it's not good looking. Citigroup. So keep your eye on these, because unless they do a V recovery, these are probably going to set up continuation patterns to the downside. Now, that doesn't mean that the market can't try to get to highs while the banks correct. I just don't think the banks go back into that super strong mode that they were in. I mean, it's still an uptrend here, but you can see the volatility with the wide ranges here. It's definitely kicking in. So we want to be careful, and we want to watch that, because that could be a real issue for the market. Now, the brokers look better. I mean, they still had a nasty move off of the highs, but they are above the 200-day moving average, so we want to watch them. Here's Goldman, spinning top right on the 200-day moving average. I mean, you can't get a better decision area than that. Here's Morgan Stanley. Here's Legg Mason. Legg Mason is consolidating here, so we want to see what's going on here. Let's look at some of the glamour stocks. Yeah, Amazon, we pointed this out a couple of weeks ago. Amazon looks lower unless the market gets off its butt. Apple, okay, if they can break through that 105 handle, you have the 100 handle right here. There's a gap there, and then you have the 200-day moving average. Googleicious, yeah, I mean, it's starting to bounce, but it's not looking super. Netflix, same kind of deal. Broke out of this little coil to the upside here. Watch the 50-day moving average. Priceline, looking weak. I mean, it's still $1,000, but you know, when I say it's looking weak, I'm short term here. I know this thing has been in a monster uptrend, but it's you know, starting to look a little frazzled here. All right, what else? Facebook. Just watching a show they were calling Facebook a buy. I mean, to me, it doesn't look like anything. It looks like it's just consolidating here. You got the 200-day moving average here, and I want to see it get above these short-term moving averages. LinkedIn, not really, just sloppy. Twitter looks lower to me. If Twitter breaks this 35 handle, I think it's going to go down to new lows. Let's look at some other stocks. Here's Caterpillar. Yeah, bearish. It's like lifts or shorting opportunities. John Deere, back to the 200-day moving average. What's it going to do? What's it going to do when they come for you? Right? You're in a wedge. You're in a rising wedge back to the 200-day moving average. Is this going to be resistance? And if it is and it turns, will it continue down to these October lows? Las Vegas Sands, all right, coiled up. Looks like it wants to release one way or the other here. Let me do currencies before I forget. Euro, just continuing to get smacked here. I had a nice bear flag and just keeps going low. I mean, I think Paul and I both think that the euro is going back to par at a minimum. I mean, we did break this key level here. All right, this was a key level, but this is really the key level. Hang on, let me grab it. This is going to really be that key level, and you can see here we're sitting right on it right now, because this was the pivot low that led to new highs in the pair. All right, so we want to watch here, because if this, I think it holds and we get at least a lane bounce. I don't know if we're going to put the low in here, but I mean, this is serious support here. So we could be getting a lane bounce here, but if we lame up and then crash through it, yeah, I think we're going to be at par quicker than you can imagine. Yeah, I mean, you could see, all right, this is a beautiful coil right at par, broke out. We're off to the races. All right, how about the dollar yen? People asking about, okay, because it had a weird kind of, right, it looked like it was going to continue, then it came down. We want to watch this batch of moving averages as resistance here, see if they hold. If they do, will we turn back down? Dollar CAD, Really nice moving, really nice strong move higher. Look for pullbacks for buying opportunities. Australian dollar could be possibly forming a small bottoming pattern here, but got to get through the 50-day moving average before I'm even a little interested in that. Let's look at a cross like the Euro Yen. Yeah, the Euro Yen's definitely showing some nice volatility. Looks like it should set up a bear flag and retest these October 2013 lows. Bonds still look higher. Yeah, bonds still look like they're trying to move higher here. Look for pullbacks for buying opportunities. Gold in a nice consolidation here. Really got off its butt nicely. 1320-ish area, right around here. That's going to be the next level to give some serious consideration to for resistance. Silver, watch the 200-day moving average. Crude oil still looks lower. Still looks lower. Still looks like it wants to trade lower. This, we talked about this on New Year's Eve. This wedge, hang on one second. This wedge here led to more downside. Now this looks like a bear flag. I mean, this still looks like we want to trade lower here. Grains, let's go through them quick. Wheat on the downside. Look for continuation patterns. Corn. Got to see what they do if they lift up into those moving averages. And D is not a is not a grain, and or at D is not a grain at least. And here's soybeans, and you want to watch. It's sitting right at the bottom of this range. If this breaks, look for the October lows. Don't forget, I'm doing this on the 19th. We have the Sunday night strategy session on a special night, Monday, which is tonight. I will leave the link in the description. Sign up. It's free. You get to hear Paul and I talk about the market and also answer all your questions. All right, let me recap what I talked about. Right here, you know, I don't want to say it's do or die, but I want to see if we can get a lift here. We have a possible double bottom. If not, 200-day is probably a magnet. And the last time we got to that 200-day, we ripped right through it. We got to do that here. And believe it or not, if we rip right through it, there's a better chance for it to bounce than if we got there, consolidated, and then went. Because then what they're doing is they're building up the supply. They're building it up, and putting the weight on it, getting the market heavy to go. But I'm going to see what sets up here over the next few days. I'm going to give the bulls the benefit of the doubt, but I'm not going to be stubborn. They better step up here and try to get a lift. All right. Any questions? Tiny@stockmarkettrendsx.com. I will talk to you in the daily video, in the daily email, or in next week's video. Have a great and profitable week.